Hello and welcome to this video, which should hopefully serve as an introduction into how you can trade FX with XTB. So if you look at the XTB website here and you go to xStation 5, our proprietary trading platform, you'll be normally prompted to enter your login details here, but because I logged in earlier, it's already remembered those for me. So this is xStation 5, the platform, just as it opens up, and you can see on the left hand side here we have the market watch. This is basically the favourites, which are currently shown as a default setting, and if you go to FX here, then there's 4 subcategories you can look at. That's major, minor, emerging and crypto. If we begin with major, these are the most popular traded FX markets. You can see, for instance, Euro US dollar is a very widely and most popular traded FX market. We also have US dollar Japanese yen, pound US dollar and euro against the pound. Now if we first off look at the Euro US dollar here, if you click on this tab you can see this is the size of any trade you'd wish to place, so that's 0.5 contracts, and you can increase the size by clicking on plus and obviously decrease the size by clicking on minus. Now this is a sell and the buy price. This is the price you can buy or sell this currency pair at, and you can see, for instance, if you want to buy this, so that's where you're looking for the euro to appreciate against the US dollar, you'd click here and that would enter a position long 1 CFD of Euro USD. You can see down on the bottom here under open position, straight away your trade will populate. It says buy or sell, the volume, the open time, open price, stop loss, take profit, current market price, commission swap, and what your open profit is. If you want to place a stop loss, which is something I'd always recommend for a trade, you click here and you can just enter your stop loss either by nominal value, so if you want a stop loss at 122, which would be 75 pips away, or you could choose in terms of pips. You're supposed to do a minus. So if you do minus 100, that would give you a stop loss 100 ticks away from where you entered, and that would give you the price at 121.75 as a stop loss, and that would be a loss of £723 if that's hit. Likewise, you can enter a take profit. So if you go on take profit, you can enter a level here, so for instance 125, or you can enter a number of pips. So let's say we go on 250 pips profit. That would then give us 125.25.8, and that would be a profit of £1,809 if it's hit. So you can just apply there. You can see both of these are shown down the bottom now. If you do want to close the position, you just click X here. You can exit the trade at any time. This is reverse position, or this here is double up position. So we'll just show you for your ease. Close the position, you get a notification up here. You've then exited the position and you'll then flat the market. When you're beginning to trade this, if you're not sure about placing your stop loss or where you what size you'd like to trade, I'd always recommend opening a ticket. So if you open up a ticket here, you can see there's 2 functions at the top, either instant execution or pending order. If you want to place a trade now, go on instant execution. You can click on stop loss here, and then if you were to buy, before you enter the trade, you can then calculate what your risk would be. So if you were to buy, you can see this button at the bottom, 122.76, and if we want a stop loss of, let's say, 122.26, you can see that would be a risk of 51 pips and £370. Now if this is bigger amount than what you'd like to risk, you can reduce the volume, and you can see the amount you're risking is reduced. If you'd like to risk more on the trade, then you can increase the volume. You can see the amount risked here is the same. All the time the pips is staying pretty constant. These only fluctuations are just for small movements in the price as I'm talking. If you want to place a pending order, so this is an order to enter the market at a specific price in the future, you can go on here. You can either have a buy limit or a sell limit. So for instance, if you want to buy, if the price pulls back to 122, you could then have a buy limit there, and then also you can place an associated stop loss. So if you're buying at 122, you might want to stop loss at 121.50, and you can see again, this would be a 50 pip risk on the trade, and if you click on buy limit here, that order is then placed in the market. You can see it's graphically represented on the chart here at 122, and you can also see graphically represented where the stop loss is for this. You can adjust these on the chart, so if you want, you can move your stop loss out or further in. And if you think, actually, I'd like to buy a little bit higher, say 122.16, looks like it's possible support, you could then move your limit in to a certain area. Oh no, sorry, that's the take profit which you could have on there. you can move the buy limit like this just by clicking on buy limit. Okay, down the bottom, the pending orders show up under this tab here, pending orders. You can see Euro, US dollar, buy limit, the volume, price, stop loss, etc. If you want to delete the order, remember this isn't an open position, just an order for now, just click simply on delete. If we do want to chart FX markets, I'll just start a new tab here and we'll go FX, and you can see this will create a new workspace for us to enter our charting. We go on Euro, US dollar. And the way I'd always start off looking at a chart is start for a longer time frame, so we can start out on a weekly time frame here, and this basically gives you an overview of what the market's been doing for several years. If we look back to 2013, 2014, you can see the market was up around 140, fell strongly all the way down to just above 1, around 104, consolidated for several years, and now more recently it looks like it's maybe back in an uptrend and moving higher once more. Now from this chart here, what you can do is look at long-term support and resistance levels. So down the bottom here, you can take your support around these lows. Now some traders or analysts will take the candles from their wicks, so the most extreme prices you see. Others will look at the daily close. For now, we'll just keep on the wicks, but that's a matter of personal preference for you going forward. In terms of resistance, you can see around this level here. This here was quite a good level. So that's taken from basically these previous highs where the market spiked up and came into this area. And then you can also see another thing which sometimes happens with markets here, where you have a support or resistance get broken and then it flips its polarities. You can see this resistance at 115.65 was broken above. Once it's broken above, you don't need to delete this line. You can keep it on your chart because it's an area of interest, if you will. And when the market pulled back down into it, you can then see if it will act as support, as it has on this occasion, and then pushed higher once more. Now if we go to a daily time frame, just look at this latest move higher a little bit more closely. The most obvious and easy way to try and identify a trend, if you think there is a trend in the market, is to draw a trend line. So use this function on the left hand side and go on trend line. You can see if we take a low from here and draw the trend line up around there, you can see we've had several tests of this trend line. After we've moved up, we pulled back and tested here, and we've tested here. You obviously need the minimum requirement for a trend. It's 1 retest. Here we've had 2 retests. This is an area to possibly keep an eye on if price falls back into it. Now if we just delete that trend line, the problem with trend lines is they're obviously straight lines, and sometimes markets don't move in the straight lines or respect them such as that, so you can use moving averages. If you use a simple moving average here, you've got on a 200 SMA, I'll just change the colour so we don't confuse it with support and resistance. Let's say we make it yellow. You can see we have this 200 SMA. I'll also make it thicker. If you want to change the thickness, you can just do this. And you can also choose what the 200 SMA is based on. You can use the open, close, high or low. I personally prefer the close, but again, that's just personal preference. You can see this 200 SMA. And what this can be used to do is to identify the trend. So when the market is below the 200 SMA, you can say that's in a downtrend. Once there's a break above it, then you can say the market is trending higher. And you can see all this period since around April 2017, the market has been broadly trending higher and supported by an increasing 200 SMA. So now if you've identified the market's in an uptrend using a simple moving average and you think there's no long-term major support resistance nearby, you could use even shorter time frames again. So now if we go down to an hourly time frame, that's the H1 shown up here, you can have a little look at the market also. You can see there's possible support at present taken from these lows here, and then you can also identify possible resistance levels around here. Now you can see the market's consolidated for the last few sessions within this range for around 122.13 to 122.95, and if you are looking for trading opportunities on this, there's several different ways you can trade this market. First off, you can look for a move in towards the resistance. So after we've had several tests on the resistance, you can look for short positions here. If you're looking for a short position because you believe there's this resistance in play, you'd then possibly place your stop loss above this level, and therefore if it does break above there, that resistance you identify is no longer valid, but you have the stop loss to protect you and make sure that you don't lose too much money on the trade. Alternatively, after you've seen it pull down to the low and a pull down to the low here, you could identify this as a possible buying opportunity. Again, then you'd enter into a position, you'd have a stop loss above a recent swing high or swing low. The third way you can trade off support and resistance, if we just go back to the weekly chart, I can show you a good example of this, is when you get a break of support or resistance. So this resistance around 115.65, you can see we had a strong break higher, then we had a pullback, and we came into this. So you can either trade it on the breakout, as soon as it breaks you can look to enter long, or you can look for a breakout and then a pullback, which would give you a fourth way to trade off support and resistance. Turning our attention to another pair, if we go to the pound US dollar, this is another of the major pairs, which you can see on the left hand side. You can also see the percentage change here. So for instance, you can see the pound US dollar is down 0.11% today, so it's been a fairly quiet day's trade, and again you can see what's happening with this market. If we do look on a shorter time frame, so this is a weekly chart, go down to possibly a daily chart, I want to talk about Fibonacci retracements. So if you look at Fibonacci retracements, what you basically want is a move, and then you look at retracements of that move, certain percentages as possible support areas to look for. So if we look from this lows here around 130, which we had back in September 2017, and you run a Fibonacci retracement up to the highs, you can see that we have this move from the lows 130.30 to the recent high around 143.48. Now once you've drawn this move from the low to the high, you can look for pullbacks, like I say. For instance, this 23.6% pullback at 140.37, this acts as support here, and you can see buyers stepped in and pushed market higher once more. Since then we've broken below 23.6 and we fell to the 38.2 where buyers stepped in again. And you can see then, once we did push higher, we actually met resistance around the previous support around 140.37. Just today, it looks like we've actually broken down below the 38.2, and if we do end today below the 38.2, then there could be further pullbacks ahead. Now, looking also, when you use Fibonacci retracements, I like to look at previous swing levels, if possible significant. And you can see this 50% swing level isn't too far from this high that we had back there, so around 136.90 is an area to keep an eye on. The 61.8 you can see coincides with this swing high, and also this area here where the price action was a little bit messy, but it's where we actually broke higher from. You can see the low of the candle where we made a strong move higher, and in particular interest actually on this chart, the 78.6%, down at 1.3312, I beg your pardon. You can see this was resistance on several occasions and then acted as support. And if we do pull down all the way into this, this could be a very important area to keep an eye on going forward. If we look at the minor pairs, so these are often combinations of major pairs, but they're not as widely traded. For instance, the Aussie dollar, New Zealand dollar. You can also see the euro against the Aussie dollar. And what you also get with these markets, because they're a little bit less liquid, you typically get a wider bid-ask spread. So the difference between the price that you can sell at or you can buy at is a little bit wider. If we want to choose one of these, just to chart it, let's say we'll go for CAD JPY. You can see we open up CAD JPY here, and we can then open a ticket or open a chart. We'll open the chart just so we can look at what's happening with this market. And you can see we've actually pulled down to quite an interesting level. Last week on Friday, so just a couple sessions ago, you can see we fell down almost exactly to this 85.45 area, and this is now an important support level to look out for going forward. If we do dip into here, if we get some positive price action and some buying, and this buyers manage to defend this level, then we could see a recovery up higher again. But if we do break down below there, then we could be set for a significant move to the downside. You can also take a look and draw support and resistance from previous levels below, and maybe other areas of interest where you think that the market could be interesting if it goes there. So basically areas of potential interest if you see the market going towards that level. So if you do break below 85.45, around 84.45 would be the next area I'd be looking for in terms of swing levels for possible support, possibly a break of support, and then further downside. Turning our attention back, so we've gone through major, minor, and now if we look at emerging market currencies, you can see these are less widely traded. So often a lot of these, one half of the pair is quite not as commonly traded, and they're quoted typically against US dollar, euro, or or occasionally the Swiss franc or the pound. If we look at the Euro TRY, so that's the Euro against the Turkish Lira. This was one of our 2018 trade ideas, which we sent out a report on a couple months ago now, and you can see we've had some interesting price moves in this. Taking a very long-term approach, and on weekly chart, you can see we've had incredible gains. The market has been strongly rallying for several years now, going back almost to the turn of the century actually, when the pair was trading around 160, 170. You can see we're now up around 465, 470. More closely, looking at recent price action, you can see there's a possible double top here. Now, a double top's an interesting formation. What this simply means is the price has made a high, it's come up, retested the high, and it's held below there. So this is a possible double top as long as the price remains below the high of these levels, which I think is around 472. And if you do look to trade it as a double top, what you also look for is a sort of neckline or some area below as a reference point. So you can take a neckline from around this low here, 447. You can see that's around 25 ticks from here to here. And if you do get a break below here, then a possible target from a textbook point of view would be 25 ticks below here. So that would take us to 422. And you can see we can draw that as such. So you can see the move from here to here is equal in size from here to here. So in terms of looking to trade this, you can look to take a short position here if you believe this double top will hold, and you can look for a move lower. But it's not really until this area here around 447 is broken below that the double top formation is fully in play, and then that would target a move from the top to the neckline below the neckline. Alternatively, if you do get a move up here and you see a break above 472, then there could be further gains, and then that would obviously negate this double top formation. If you want to just draw on the double top to make it a little bit easier to see, you can use arrows like that, and you can see we have this level here, which almost perfectly coincides with the previous high there. Finally, if we look at the fourth category of FX that we offer, we have cryptocurrencies. You can see here the 5 cryptocurrencies we offer, all enjoying fairly strong gains today, apart from Dash, which is only up 0.3%. And you can see, again, if you want to trade any of these, you can just chart them as so. If we look at Ripple here, and then you have a Ripple chart. Okay, thanks for listening, and best of luck if you're trading FX and going forward.